everybody. My name is John Palmer. I'm a principal at Mazars, and I'm joined here today with Patrick Zerbick, who's also a principal at Mazars. I'm responsible for the internal audit practice in the US, and Patrick is responsible for our data analytics operation globally. It's a pleasure to be here again at Bank Directors Conference. We have been a sponsor for a number of years, and we look forward to talking to you today about the value of data analytics in the AML world. Just as a reminder, Mazars is a global accounting and consulting firm that has a large presence in the US and globally over 25,000 people. So with that introduction, I would like to hand over to Patrick to start the discussion on data analytics.
Thank you, John. Hello, everybody. Let's dive into the world of data analytics and start with big data. We've all heard of big data and the sort of a cliche on the volume, the velocity, and the variety of data. So those are the 3 V's. And data has grown exponentially in the past few years, especially unstructured data. And when we talk about big data, we talk about the set of innovative technologies that are being used to collect, organize, analyze all kinds of data. And we are looking at data today as a very, very fast growing field, in the sense that we have, for example, the equivalent of 212 million DVDs, so the data equivalent of that produced each day, and that's growing very, very fast. So that's big data. And big data is also has led to advanced analytics techniques that are basically based on human behaviors. What is machine learning? Machine learning is what we use to designate those technologies that are mimicking human behaviors. Basically, those are algorithms that learn from historical data and continue to learn and adjust as data grows. AI systems, artificial intelligence systems, use machine learning to mimic or understand human behaviors, basically the group and the network interactions, the detection of hidden relationships, the detection of patterns, and the prediction of outcomes. And it's able also to categorize events or people or transactions, or whatever items we're dealing with based on past behaviors, therefore helping in segmentation exercise, such as scoring, for example. So all these techniques are used for that purpose. And big data has a crucial role in our industry, in the financial sector. These techniques are broadly used, and there are many applications in which they are used. First, on all the risk management area, whether it is cyber risk or credit risk or fraud or money laundering, suspicious activity. And that's when these data analytics techniques come very handy and are very powerful. Now, it is a challenge for institutions because first, we need to internalize these advanced technologies and the expertise that goes with it. Oftentimes, it is actually very hard to look at data because it is siloed, and different data may not be all at the same place. So you have external data for sure, and that's making it very challenging to get 360-degree picture and in order to derive insights. So that's basically on the financial sector, the role of big data. And let's hand it over to John again and dive into the world of AML.
Thanks, Patrick, to give us a sort of a high-level perspective of data and the challenges around managing data. And we hope that through the rest of this presentation, we can start connecting that a little bit to the BSA world. Now, many of you listening to this, I know, sit on boards. You may even be part of an audit committee, or for that matter, part of a compliance committee. So BSA AML is not new to you. However, we all know that BSA AML presents huge risk to financial institutions from a regulatory perspective. However, I also understand that there are varying profiles from a BSA risk perspective. Some of your institutions may be low risk for BSA AML, given your customer base, the size, and the locations in which you operate. For others, you're probably high risk. One thing for sure is we know that we need talent in that area. We have to buy systems. And for a lot of you, this is a very expensive cost to your institutions. The other factor that you probably are all aware of, but really is a very important one, is the extent of data that impacts the success of our BSA functions. As you're well aware, every transaction, customer and wire, and every activity you can imagine flows through your BSA function in one form or another, depending on your program and the systems that you have in place. And on this chart here, you can see we've broken out 3 core segments: customer demographic and due diligence, transaction activity and surveillance, and then, of course, investigation, monitoring, and reporting, all of which is very critical to managing your programs. But even more importantly is the data that is being observed and analyzed, because the success of your programs are very dependent on interpreting the information that you're getting through your systems and through your teams. And therefore, the quality and efficiency of your programs is highly dependent on those factors. And we'd like to explore today how we can try and improve some of that analysis to have a more positive impact on the outcome of managing your programs. Could you move to the next slide, please? So in that regard, since this is a very big area, we kind of honed in, if you will, on 3 core challenges that I'm going to discuss here, but that we believe can benefit from enhanced data analysis or using more, let's say, sophisticated techniques. The areas of risk, shall I say, or challenges that we've highlighted, and we'll discuss further in the coming slides, evolve around, KYC, customer due diligence, and identifying the right risk profile for your customer population. Also, the challenges around clearly identifying the indicators of risk, which are embedded in the huge amounts of data and volume of transaction activities that you deal with every day. Being able to identify those trends and patterns, or pick out the multiple beneficiaries or multiple originators and reviewing that data from that perspective is really very challenging. Not to mention the impact on some institutions of the PPP loan activities that just happened, or advances in mobile banking, fintech, and so forth. And then finally, we'll look at alert management which many of you are probably aware that your BSA team spend an enormous amount of time following up on system-driven alerts to try and identify if there is a case that's worthy of investigating. And many of these oftentimes are false positives. And so we think there's a way that data analytics can help enhance those activities as well. So this next slide touches on the first one that we talked about, KYC verification and customer due diligence. And we broke this into three primary categories that really deal with kind of the ongoing life cycle around managing a customer from a BSA perspective. The initial onboarding, the continual review of customer transaction activities, and then updating an ongoing review of what is the appropriate risk profile, for a customer. So I'll discuss a few things where we think data analytics can really be helpful here. Under the new customer relationship scenario, we really think that there is much that can be done over a perspective of historical client data and relationships by segmenting that data into the core client types that you have. And of course, that will vary and can be complex or not so complex depending on each particular institution. But that storyline that can come out of the data can really help as you've come across similar clients that are onboarding. Because one of the challenges with a lot of the systems we have today is we basically guess when we're onboarding as to what the risk rating might be. And sometimes we have to rely on the system to analyze transaction activity for a number of months before we truly get a better handle on what kind of risk profile or whether what they told us at account opening is actually panning out in the transaction activity. And obviously in transaction activity, and this one could be a little bit more advanced, but it's coming, and that's the ability through machine learning techniques to be able to analyze that transaction activity in a more meaningful way that will allow you to better understand the risks in the data that your BSA programs are analyzing to become more efficient. And then finally, the risk ratings. To me, if an institution is not well positioned on understanding their customer risk ratings or do not have a good handle on that, every other system that you attach through your program does not feature in the way that it ought to be, working for you. So getting it right on the risk ratings is pretty critical. Here on this next slide, now we're looking at various indicators of risk and where analytics can make a difference. And there's a couple of targeted areas we've looked at here, and one is wire transfer activity. Now, depending on the institution, the kinds of wires and the volume of activities that you have obviously dictate the value that comes out of what is being shown here. But many of you have tremendous volumes in wire transfers. And being able to analyze that, look for patterns, look for commingled relationships that might help drive understanding of beneficiaries or aggregating transactions in a way that you can better understand if you have similar originators involved. And generally looking at the in and outflow of your activity using data analytics will certainly tell you a lot more about what your customers are up to or group of customers that could flag some risk. And right now, the way this works through the system, sometimes very hard to tell in isolation as it flows through the monitoring system. So we think there's tremendous value there from a data analytics perspective. We think that in All right, can you just go back 1 second, please, on the other slide? Because with regard to machine learning, we think here that in the transaction monitoring systems, that the use of machine learning techniques, which is coming about, whether it sits on top of transaction monitoring systems or supplements it in some way, is going to allow far better outcomes in terms of the rules and parameters that you're currently operating with your transaction monitoring systems. The next slide. Okay, so finally, alert management. And this one, I believe, is one of the ones which is sort of what I call the lowest hanging fruit here to get some advantage out of analytics, because many of my clients struggle with this. They struggle with dealing with multitudes of alerts that are false positives. And so we believe that with some smart data analytics over those false positives, you'll better be able to know how to fix some of that and reduce the number of false positives and therefore have more effectiveness around that. Of course, if you backlogged in alerts, which does happen from time to time, sifting through the backlog of alerts can be a real challenge, but data analytics can really help you make sure that as you go back and get caught up, you're focusing on the right alerts, and that can be helped with tremendously by data analytics also. And the middle issue related there is just, listen, we all need as much help as we can get from data analytics and smart learning techniques, because we will have limited resources, and some of our resources are remote. And so we think that data analytics is really going to help resolve some of those problems as well. At this point, I'm going to hand back to Patrick. He's going to talk about some actual examples to illustrate some benefits.
Thank you, John. Let's focus a little bit for one minute on alert processing that John was mentioning and talking about. And there are really two things that can help in alert processing that are related to data analytics, and that's automation and AI, artificial intelligence technologies. There are many benefits that can be derived from automation in terms of productivity, in terms of basically getting better operational performance and reducing error rates and obviously data entry costs. That is something that's very beneficial. However, the challenge here is the acceptance level of those new technologies and automation by the organizations and by the regulators. So you need consistency with industry standards. Artificial intelligence is great to get better insights on the data and identifying new risk factors that had not been identified before. And that can be customized pretty much on demand. Now, it again, it's not without challenges in the sense that we need to set the appropriate balance of, say, false and true positives, for example. So it has to be fine-tuned in order not to be too stringent and not to lose either. But it can add a lot of value to the current systems. And if we focus on one specific facet of AML, let's talk about model validation, which is, as you know, a mandatory periodic assessment of AML monitoring systems. Over the years, scrutiny has increased and will likely keep on increasing. And basically the validation, those validations, model validations, are comprised of several steps. Basically, you have the conceptual design, the system and the data, the processes, so the alert generation, the monitoring, the processing and resolution of the alerts, all that is being validated. And how do we show actually regulators that all issues have been detected, analyzed, resolved? How do institutions deal with ever increasing complexity of behaviors, patterns, the volumes of transactions, and therefore of alerts? How do we reduce false positive levels in order to contain operational costs, because we have to follow up on all alerts? So those are challenges in model validations, and some of these challenges can be addressed by advanced analytics. And there, to address them, several things are at play. Data preparation and processing techniques, data science, and that's the algorithmics, basically that is being leveraged, and data visualization. All these elements actually can come handy and add value. And the way they add value is traditionally for basic models in helping replicate the models, replay scenarios, for example, above the line, below the line simulations. Those are typically being used. Analytics is typically being used for traditional models. For more complex ones, we have more of a black box challenge, and there we can validate the input data. We can test the robustness of the model building methodology, and obviously test the outputs and validate these outputs. So you basically get, as I was saying before, all facets of analytics in the sense that the data processing, the algorithmics, and the visualization are at play. And the goal here is to lead to better decisions and better actions, where whatever alerts level is being generated, whatever output we get from the systems, we need to be able to address them in a timely fashion in order to be compliant. That's where, again, data analytics, machine learning, and artificial intelligence can add a lot of value. In conclusion, what we've seen here is that data analytics and everything that goes with it, which is AI, which is machine learning, can be foundational for a risk containment strategy, and will increasingly be so. It provides solutions in KYC verification, customer due diligence, and indicators of risk and alert management. Organizations have been and will continue to increasingly leverage data analytics beyond compliance. The goal there is to minimize the risk of fraud from occurring and optimize operational costs, as we described previously in this presentation. And I turn it over again to John for a conclusion.
Thank you, Patrick. I really wish we were in person, and we're looking forward to being part of this conference next year, when hopefully that'll happen again, and we'll be in a position to take questions, as I'm sure many of you have a lot of questions about this material, some of which is complex and hard to visualize the true benefits of, and I'm sure there's many areas that we can provide to regard to additional clarity. I would say this, that as we continue to evolve our ability in this space with Patrick and his team, we've been focused rather heavily in the model validation area, where we're using more sophisticated techniques to perform those validations based on the overview that was provided by Patrick. In addition, an area that we've been somewhat focused on too, and hosting roundtables and having discussions with our clients on, is trying to figure out this problem of false positives that are emerging out of these monitoring systems, and also to some extent out of the OFAC matching processes, to help departments become more effective and efficient in really trying to pursue the right cases that they ought to be pursuing from a compliance perspective. I hope this has been helpful. On the final page, you will see the contact information for both Patrick and myself. And we would be delighted to hear from anybody or answer any questions or follow back up with you in your particular situations where you may be having challenges in the BSA AML space, where we truly think data analytics has a big role to play. With that said, we thank you for the opportunity again today to talk about this topic and be part of this program. Thank you very much.
Thank you for your time and attention.